วัสดีค่ะกราบเรียนท่านผู้บริหารบมจ.ธนาคารกรุงเทพนะคะผู้บริหารบลจ.บัวหลวงนะคะแขกผู้มีเกียรติทุกท่านนะคะ Welcome everybody to our panel today. Then this session we are going to discuss under the topic of finding investment idea for 2026. You know, to how to get the resilience amid the heightened valuations. So I believe that looking from you, did you have a good sleep last night? I never have had a good sleep since February 28. And I have a lot to ask from Ekaterina because I believe that she keep an updated on what have been going on. Because you know, Ekaterina since last year up until this year, market rallied quite so well under the backdrop of Goldilocks economic expectation.
Right.
But then things have changed abruptly from that to the concern on stagflation. How does that affect on the way you think of the investment idea in 2026? And if so, what are the changes? The floor is yours, Ekaterina.
Absolutely. Look, a lot to unpack, but I'll start it from kind of the helicopter view. You know, when we look at a decision where to invest, I mean, it's an empirical evidence that 90% or 80 to 90% of your decision in terms of outcome in your portfolios is an asset allocation, right? So getting the asset allocation right, it's 80 to 90% of your kind of returns in the portfolio. Now, how do we think about that asset allocation? You need to decide where in the world do I want to be invested. Now, that decision, we call it for this year in 2026, but also is referred to 2025. But particularly this year, when we have quite a divergent, drivers of growth, we call it structural drivers of growth. Where are those structural opportunities in the globe that exist that will prevail despite the market volatility, right? So then you decide, again, where those structural opportunities are, which countries, which regions do I want to be invested. Then the second decision you need to decide within those countries, which sectors I expect to do because of those structural drivers and those opportunities. And then the last decision is, how do I deploy into my portfolios? Do I choose an alpha type of or mutual fund that delivers alpha, or do I do it through a beta product, or do I do it through individual securities, right? And I'm going to unpack a little bit of that for you to understand kind of the thinking. So when you think about that structural drivers of growth, if you look at US, and I'm going to focus on 3 key markets, and of course we can answer any questions later in our breakout session. But when you look at US, what is the structural opportunity for 2026 for US, despite the volatility that we're seeing? Is ultimately the reindustrialization of the US economy is the biggest structural opportunity. What does that mean actually in real terms? The US has gone into a journey driven by AI innovation into reindustrialize and becoming a lot more manufacturing driven. We see a significant amount of the investment being deployed through private money, through foreign investment, but we also not to forget, we enter in 2026 with significant fiscal support that was projected through Biden administration. We had the Inflation Reduction Act, we had the CHIP Act, and we also had the One Big Beautiful Bill. So what that creates is abundance of liquidity in the sector that particularly the One Big Beautiful Bill incentivizes companies to deploy into investment. Then we also had the Fed. The Fed has cut 175 basis points from the 2024 until now. So that is an accommodative monetary policy. Again, we're not in a perfect place with regards to that liquidity, but we're in a better place than 2025. So in terms of that liquidity, it's there, but also it gets channeled into a sphere where it's driven by innovation and manufacturing. Now, when you say, again, driving it down, where do I look to invest in the US? And again, what are the places of the market in the US that will stay more resilient despite the volatility that we're seeing? And clearly, that is channeled and driven at the moment by innovation and AI. But as you heard the panel saying, it's not about the Magnificent Seven anymore. It's about the broadening of the US market. What does it mean, the broadening of the US market? The hyperscalers are spending into the merchants of compute. What does it mean, merchants of compute? The people that are providing, the companies that are providing to those businesses that are providing the compute capacity. That's electricity, that's grid, that's power generation. Those are the companies that we start to paying attention to. And how do you do that? Again, through alpha selection. You saw the chart earlier from, I think the Fidelity pointed out, there's a dispersion in the market at the moment that alpha opportunities at the moment a good place to drive that value out of the markets. Because again, we're not in beta markets that everything uniformly rallies. So again, staying invested in a structural opportunity. What are the sectors, and then what are the funds that I can deploy in? And I do genuinely think this is the market for alpha opportunities. Now, if you look and I'll give you two other markets, key core markets, of course. Again, not to forget about the Europe. Europe is going through its own structural shift. And that has been catalyzed by geopolitics, again, decoupling of Europe from the US in terms of the defense, and the desire of Europe to become a lot more strategically autonomous, whatever as regard to defense, to energy independence, but also increasingly so we're seeing the decoupling now with regards to technological advancement. So Europe's ability to drive innovation and deploy into the sphere of that strategic independence is a strategical opportunity. Now, where is the money coming from? We know Germany passed a trillion of fiscal stimulus into Europe, which is primarily going to infrastructure, is going to defense, but it's going to have positive ramifications to the broader Europe. Now, also we've had various regulatory changes and fiscal stimulus that are channeled into that strategic autonomy for Europe. That is going to be a structural theme that is going to pay rewards, again, for longer term, despite the volatility that we're seeing currently in the global markets. And now, how do I deploy that, and how do I invest in that opportunity? You have to harness that opportunity. You have to single it out from the broader European market, because it's not a uniform European performance. You need to get the opportunity into alpha fund that taps into that strategic opportunity. So again, being a lot more, I'd say, targeted in how you allocate, it's a critically important. Again, investing in an ETF that does European exposure, it's not the current market, because again, we're not in a market that everything gets reflated. We're not in a market where there's significant liquidity coming from monetary policy or fiscal policy. We're in a market of selectivity. And the last and not least, and again, Japan has been coming out in discussion, and we can talk about China, but we'll focus on Japan, because I genuinely think that Japan is strategically on a rise. What has happened as a consequence of Takaichi administration is Japan has emerged into a strategic sphere that is unparalleled to where Japan has been for the last decade. So that's creating, again, a structural opportunity for Japan, and we've seen the shift in the fiscal support from Japan into strategic sectors like defense. We've seen it into innovation. We've seen it around, again, supporting consumer and reflating the broader economy. That is a structural opportunity that is undeniably so. Despite the volatility that we're seeing at the moment, if you say, what is my north star of my portfolio? Where do I want to get by the end of the year? Those three themes that are structural to your core portfolio are going to drive the opportunity in your portfolios. And again, I say, how do you deploy it? And again, to one of the slides that I think was shared by Pictet, they said it's important to assess those opportunities, assess the products you want to allocate through, but also you have to deploy a level of diversification in your portfolio. It's not just about equity markets. You need to deploy as well through fixed income, because it does provide a balance. It does provide a diversification in your portfolio. So again, I gave the helicopter view, but I do think there's a lot of opportunities, but we need to be focused on what the structural opportunity is.
Thank you for providing the full coverage on all, I would say, all around the world's economy. Just in 10 minutes. Thank you very much. And ขออนุญาตแปลนะคะ สิ่งที่อีคาทรีนาซึ่ง she's managing behind you for us นะคะ behind you อยู่ในมือของคุณอีคาทรีนานะคะจาก BNP Paribas สิ่งที่คุณอีคาทรีนาพูดนะคะก็จะบอกว่าจุดตรงนี้เนี่ยสิ่งที่เราอยากจะเจอคำว่า resilience ซึ่งแปลว่าความยืดหยุ่นเนาะตกไปง่ายๆแล้วก็ต้องกระเด้งกลับมาให้ได้เนี่ยก็จะต้องทำสิ่งที่เรียกว่า asset allocation ต้อง diversification คือการกระจายตัวของสินทรัพย์ที่สามารถให้สิ่งที่เราเรียกว่า alpha ได้เพราะฉะนั้นแล้วเนี่ยสิ่งที่เธอเล่าให้เราฟังเนี่ยเธอก็จะไปในทุกประเทศเลยไม่ว่าจะเป็นสหรัฐอเมริกานะคะยุโรปและญี่ปุ่นซึ่งทั้ง3 region นั้นเนี่ยมีนโยบายที่น่าสนใจแล้วก็ยังเจาะลึกรายเซกเตอร์ให้เราด้วยเพราะฉะนั้นทุกท่านเนี่ยสามารถนอนหลับได้อย่างสบายไม่ต้องมาตื่นตามดูทรัมป์ในทุกตี 3นะคะเพราะว่าอีคาทรีนา look after for us so the next round is going to be the tech sector and industrial sector specific so I would probably invite คุณ Matt คุณผิงฟัน and คุณ Kevin to join with us you have seen the news since last year that Max 7 being the star and in 2025 but then after the earning reports come out like right after February 28 it seems like AI and tech lack of some momentum and exemplify with the tension in Iran and US right now, the stagflationary concern came in. So my question is that if investor right here probably have a lot of questions to ask about this sector, could Matt, do you think that AI could still be the structural growth driver when it comes to sector specific that would add more resilience to our portfolio?
Thanks, Dr. Ming Kwan, and thank you for having me today, BBLAM. Look, on that question, I think everybody believes that AI certainly can be a structural growth driver. It will continue to be a structural growth driver. I think the key question is, at what level do you want to invest in that structural growth? For the last few years, it's been all about the Mag 7, as you rightly mentioned, and Ekaterina and some of the previous panelists are talking about market broadening, and I think what investors should be doing is looking at ways that they can get exposure to these key drivers, but do it in a variety of different levels. We are an infrastructure investor. We've been investing in infrastructure for the past 20 years. When people talk about AI and infrastructure, they often mean the GPU racks and the cloud compute and all of that sort of stuff. We're talking a layer down, the most fundamental levels of enablement of AI, of industrial capacity. We're talking about electricity utilities, gas utilities, water utilities, energy networks, transportation networks, roads, rail, airport, things like cell towers to power our communication devices and so forth. They are absolutely fundamental. It's become really clear that the key gating factor for any AI development, any more data centres, even the industrialisation that we're talking about, whether it be the Gulf Coast of the US, whether it be through Europe and areas like Germany and the stimulus package that's already been mentioned, access to power is the key gating factor there, and it's our electric utilities that can provide that access to power. On the industrial side, again, if you're going to set up a new industrial facility, you want stable power supply so you can run your factory. You want easily accessible transport routes to get your raw materials in and your finished goods out. And it's the physical infrastructure that provides all of those services. And most importantly for the investors in the room looking at how do I actually gain access to some of these really powerful long-term themes, the way that infrastructure works is generally they're essential services, they're generally monopolies or oligopolies, and because of that they operate under long-term concession agreements, or most commonly they work within a regulated framework, and the regulator provides these companies an allowed return based on the investment that they're making into their asset base. It's not about supply and demand of electrons. It's about I need to invest X billions of dollars in my asset base to make sure that they're resilient, to make sure that the power flows, and the company gets rewarded for that investment through an allowed return that we all see in our power bills over time. So that's a really strong, powerful way to add resilience to a portfolio. So really, I think, to pick up on the key themes, countries are all about self-sufficiency, reliancy, insulating themselves against disruption. So energy security, AI sovereignty, getting onshore and getting manufacturing capacity back onshore. And so by investing in the infrastructure, you're actually investing with and alongside the public policy initiatives of these governments. So it's a very powerful backdrop to provide resiliency and predictability into your portfolios.
Okay, thank you, Kun Matt. Kun Matt is from Franklin Templeton, and he managed B Global Infrastructure for us. Kun Matt อยู่มาจาก Franklin Templeton นะคะแล้วก็นักลงทุนที่ถือ B Global Infra อยู่ Here's the guy แล้วก็สิ่งที่คุณแมทเนี่ยพูดถึงเรื่องของรายเซกเตอร์เกี่ยวกับ AI เนี่ยเวลาเราเป็นคนทั่วไปเราจะเข้าใจว่า AI ก็คือ2คำแล้วแค่นั้นใช่ไหมคะแต่ที่คุณแมทเล่าให้ฟังเนี่ยมันมีสเปกตรัมของ AI เนี่ยอยู่เยอะเต็มไปหมดเลยตั้งแต่ต้นน้ำกลางน้ำปลายน้ำแล้วก็เซอร์วิสเพราะฉะนั้นแล้วเนี่ยหน้าที่คุณแมทก็จะดูว่าจุดตรงไหนที่ยังมี point ที่จะสามารถadd ตัวความยืดหยุ่นของ return ให้กับผู้ถือหน่วยได้แล้วสิ่งที่สำคัญไปกว่านั้นเนี่ยที่เกี่ยวข้องกับโครงสร้างพื้นฐานนะคะนั่นก็คือสิ่งที่เรียกว่า concession พี่เนสคะ concession ภาษาไทยแปลว่าอะไรอะไม่รู้จริงๆสัมปทานนายไม่ยอมตอบค่ะนั่นคือสัมปทานกิจการใดที่ธุรกิจเนี่ยสามารถมีสัมปทาน ที่ดำเนินการไปได้นานๆก็จะเก็บกินแล้วก็ได้รายได้สม่ำเสมอตรงนั้นเนี่ยเป็นจุดที่เป็นคุชชั่นหรือเป็นเบาะให้กับผลตอบแทนนะคะสำหรับผู้ที่ถือหน่วย B Global Infra ของเราอยู่นะคะ Next question is going to be to ask คุณฟาน Mr. Fan that I have heard that AI have been put into the 15 5-year plan and it's just launched lately last year. So do you think that, well, people keep mentioning about Max 7, but this seems to, looking at AI in various countries. But right now, AI has put into the policy and seems like the Chinese government want to reinforce that. Do you think that would be the sparking point, will make the investor to look at AI in China in a different way?
Yes, thank you for that questions. So first of all, I'm really privileged to be in this panel for the third consecutive year. And for us last year, in the same events, we talked about the changing world order and the deep seek moment. I think this year we start talking about changed world order and deep thinking moment, especially for China AI. So first of all, I think artificial intelligence is definitely the most important investment theme in the long term. Think about the reason why we're doing investment. So we either looking for the extension of our border of where we can go, probably from country to continent, to the whole globe, even to the outer space. That's the investment theme 100 years ago for vehicles, for oils, for a lot of things energy related. Another investment theme is we're looking for the longevity of the investment. Coming back to the investment principle 101, investment is all about discounting the future value into today's value. Think about if you can do something used to take years to become taking months, weeks, days, hours, minutes. That's exactly the beauty why we invest into artificial intelligence. And of course, after years from now on, the understanding of artificial intelligence is also going to a next level. Now everybody understands we are coming to an age of a scarcity. Scarcity is coming from, first of all, geopolitical. Second one is a technology. Geopolitical-wise, the supply chain globally has changing from a just-in-time supply chain to securities first, meaning every country is duplicating the investment on supply chain. Many countries is also remilitarization of their capex. Countries are chasing for natural resources for this. And on the other hand, technology, especially the artificial intelligence value chain, has been creating scarcity for many areas, from computing to storage, even to the experienced labor force. That's basically the reality. And that also applies to China artificial intelligence. In the past, many people thinking about artificial intelligence should have company with a good business model, which meaning you have soft assets. You're enjoying the valuation expansions, which coming back to the topic today, heightened valuations. Now many people start talking about we should invest in the hard technology. That one, coming back to what I just shared earlier, many parts is related to the manufacturing. And that's actually coming back to the areas that Chinese companies are good at in a global supply chain. And that has been mentioned quite a few times in the 15th five-year the plan as well. One thing to think about the China investment is, for China, many times the short-term plan is already a long-term plan for many countries. And for the 5-year plan this year, actually you can trace that back to 10 years ago into what's been the self-reliance, what's been the new productivity forces, and what's been the securities for the nation. Going forward, I do agree what panelists shared. We do need to upgrade our investment philosophy as well of what's a good company and what's good business model. And a lot of that has been reside in the alpha seeking or alpha pictures. That's hopefully what we can do together with BBLAM to provide to Thailand investors in this forum.
Thank you Mr. เพ่งฟานขอบคุณคุณเพ่งฟานนะคะคุณเพ่งฟานดูแลกอง B Chinex นะคะแล้วก็ B China นะคะสิ่งที่คุณเพ่งฟานพูดเนี่ยน่าสนใจตรงที่แกพูดคีย์เวิร์ดสำคัญบอกว่า scarcity เวลาที่มีอุตสาหกรรมสำคัญขึ้นมามันมีการดึง resource เข้ามาหาอุตสาหกรรมนี้ซึ่งถือเป็น AI อันนี้ค่อนข้างเยอะแล้วเมื่อไหร่ก็ตามที่มี scarcity เกิดขึ้นมันก็คือ opportunity เหมือนกันก็เป็นเหมือนกระจกส่องซึ่งกันและกันแล้วนอกเหนือจากนั้นท้ายสุดคุณผิงฟานบอกว่าเวลาจีนมองสั้นๆในแว่นตาของจีนนะคะมันคือการมองยาวๆในแว่นตาของประเทศอื่นๆเพราะฉะนั้นเวลาจีนบอกว่า5 ปีของจีนคือหลายปีมากนักในแว่นของประเทศอื่นๆเพราะฉะนั้นถึงแม้ว่าจะมองว่า5 ปีจะดูสั้นสำหรับเราแต่5 ปีของจีนนั้นยาวนานดังนั้นภาพตรงนี้จะอยู่ไปกับจีนอีกสักระยะหนึ่งเลย so let's me follow up back a bit with คุณ Kevin Kevin you manage Beijing right now so we have discussed about AI in China and one question that investors probably have concern on AI to be specific they concern about what or where we are in the cycle of the sector because we have the early cycle the mid cycle the late cycle some people say that hey don't invest in AI because it is too late now do you think it's still too late to invest in AI industry in China
Thanks Meng Quang and also thank you very much BBLAM having me here today to share my view in China so firstly to answer your question I think AI development is still at a very early stage However, the nature of the cycle is changing. In the past, most of the company focus a lot on building the model, make it very powerful, functional, and now we are moving towards more application related. So for example, we are also experiencing more penetration of AI into different industries. Therefore, I think we are still in a very early stage. So look at investment. In terms of infrastructure investment, in the past, we do a lot of training-related infrastructure. For example, buying a lot of high-power CPU to build the foundation model. While now, because of the penetration increase, application increase, we are actually increasing more investment in inferencing-related infrastructure. Therefore, in terms of hardware, we are still need a lot of AI data center, networking components, and also other related area. So the investment will gradually change from training related to inferencing. Maybe we need less powerful CPU, etc. At the same time, we will, because of the rise of penetration and also the rise of application, we will also need a lot more power to power the AI data center. Therefore, we will also need more power-related infrastructure. For example, build more power plants, build more power grid, so it will benefit all the power equipment, grid equipment related name along the value chain. So this is how it changed in terms of the investment. And then next question you may ask, so these people spending a lot on CapEx, infrastructure, all these, are they monetizing it, AI? Are they making profit? In terms of monetization, actually, it's not a future dream. It's already happening. For example, like the hardware company that I mentioned, server, producer, data center, or networking components, or chips. They have significant amount of sales, and it's growing rapidly. They are making huge profit. That's why we see that kind of valuation expansion, earnings growth. So they are not only monetizing AI, but also making it profitable. However, in some of the other stage, it may be a little bit different. For example, in the hardware space, we do see monetization, For example, the large language model, they can gain revenue from token sales. And also generative AI, they gain revenue from picture generation, video generation, and it's already utilized in a lot of media, movie, etc. At the same time, so basically you can see that these kind of software names, they can also monetize their AI investment. And some of the enabled industry is actually embedded in their industry or operation. For example, in healthcare section, we know that AI has been useful in image screening to find diagnosis of the patients. At the same time, we also see AI application in, for example, AI anchor in e-commerce space. You will see the AI anchor selling or promoting the product. And these are real-life examples of how this company monetize AI. And in the hardware space, we are almost more related industry. AI is also helping monetization. For example, autonomous driving, we know that AI help the car to steer, to find the link, and it's already in the market. And also human and robot, although it's still early stage, but we know that they are also growing rapidly. AI will be used in different kinds of control system, from planning the logical thinking, planning the task, to motion control, how they move the body. So all these are also real-life examples of monetization of AI. However, in this part, which are more related to application, is a little bit more early stage, so they are not yet reached the profitability level yet. What I think is, in the longer term, with the cost advantage, especially for the Chinese one, low cost advantage, and also the scale effect, because of the market is huge, I think they will eventually achieve a profitable stage in a short period of time. And especially for the Chinese one, because of the cost differential, they may be also able to capture the market share from the US counterpart, which are at a higher cost, especially when we have the larger scale and higher usage, like open call. The token usage is like 6 to 10 times of a simple checkbox. So the cost advantage will be even more outstanding. So that will create a lot of opportunity for us in the AI value chain. So it's not late, but still early, and a lot of opportunities.
So 3 words that I get from you, the first one is not late, and then it is in the period of monetizing, and China can do it at a very low cost. เพราะฉะนั้นแปลให้ฟังนะคะ3 keyword คุณเควินบอกว่าณตอนนี้ยัง early stage ยังมีอะไรที่ต้องพัฒนาอีกมากและอันที่2จีนทำได้ถูกไม่มีใครทำได้ถูกกว่าจีนและอันที่3ใครบอกว่าลงทุนแล้วไม่ได้อะไรกลับมาเลยตอนนี้หลายๆ sub sector ใน AI กำลัง monetizing หรือกำลังได้รับผลกำไรคืนกลับมาแล้วเพราะฉะนั้น AI แล้วก็ infrastructure เนี่ยบางส่วนก็ยังสามารถ add resiliency หรือว่าความยืดหยุ่นให้กับการลงทุนของเราได้ Let me move to the next round with I am going to do the country talk. We have portfolio manager who manage Indian equity and Chinese equity with us, and you have seen now that how China and India navigate through the tension right now. They are very pragmatic. They kind of protect their own interest in their way. But when it comes to investment, people kind of reluctant to get into Asia lately. Do you think this is the right time now, Kun Apichet, to look into India in a different way?
Thank you, Dr. Ming Kwang. A very good morning to all of you, and thank you very much for having me on this panel. I think I'd just like to say that the biggest question we're always asked, when we talk about India is valuations. And, valuations always play a very key role for clients because India is always perceived to be expensive. And our peer or our neighbor is always perceived to be a lot more, I should say, the valuations, look very differently for China. Good news, investors in this room. From your all-time high PE multiple of 23 times, India today is at 18 times. So it's a great PE multiple for the market. Last year was a disappointing year for us in terms of EPS growth. This year looks extremely exciting in terms of EPS growth. the spoil sport in the room is the same element which is hitting us all, which is oil and oil prices. Again, some good news on that front. The war seems to be easing out. I've heard many of my esteemed panelists earlier today talk about it. Nobody has, a button, a finger on the button on when it'll end. But it seems to be that we're going to be on a pause. The market itself, as far as India is concerned, I think it's a very diverse market. So no sector themes. When you talk about, we are talking about the AI theme here. And I would tell you that, I heard a lot of my colleagues talk about diversification. And India is just that market that gives you that diversity. There are many different sectors that you could look at. Consumption is the biggest theme that we follow at Nippon. And we look at consumption through financials, through every element in the market, be it startups, be it listed, non-listed. Consumption is going through the roof. So the valuations are looking good. EPS growth is looking good. The market has a depth. I would say at this point, I would be looking at India. If I had some money to invest into this market, I would probably put $20 into the market out of the $100 that I have.
Thank you, Kun Abhijit. One keyword that I can hear from you is cheap, cheap, cheap.
Almost like a bird.
ไม่ถูกกว่านี้อีกแล้วนะคะสำหรับอินเดียคุณอภิจิตรดูแลกองบีภารตะนะคะจากนิปปอนอินเดีย Growth Story ยังอยู่นะคะ Capability ใน Long Term ของอินเดียก็ยังอยู่อาจจะสูญเสียความเซ็กซี่ไปบ้างบางส่วนปีที่แล้วแต่ณระดับราคาตรงนี้น่าสนใจ So let me get back to China a bit as China navigating through trade tension since the Mr. President came in there never be a good sleep for the president in China in any single day. There's a lot going on in China in terms of trade tension, in terms of how to deal with the tension between other countries. But somehow, markets seem to drag China into the stage 2. And then when investors seeing that, they probably we should avoid China for a moment. But then I have seen the NPC coming up to, okay, we know where we are, and so we revised down the GDP growth a bit, below 5 percentage point, and then we are going to focus on the quality of growth, the domestic consumption, the domestic economy. So, Ping Fan Sen, do you think that this is the growth story for China if China, pivoting their point into looking at the way they can manage their country instead of, fighting with the United States and perhaps, focus more on quality of growth inside the country?
Sure. So first come to the geopolitical tensions. For us, we always think the ocean is big enough for more than just one country or one economy. Ocean is always big. Second of all, given the geopolitical tensions, and that's why we talked about the changed world order earlier. For these, one of the key objectives for China economy is definitely growing in a better way, not just become bigger. That's why there's a lot of focus shift on the domestic consumptions. And I think this is matter more to China. Also, it's a big shifting factors for Thailand as well, given China is the biggest trading partner with China. So meaning China's capex will be the growth for Thailand market. Chinese companies' earning will be the earning for Thailand markets. On that way, I do encourage people travel to China, especially now we are visa-free between two countries. It's the best way to see where the AI exists in China. It exists in the workshop, in the factory, in the railway, in the road, in the shopping mall, also in how we manage the financial products in China. Now, coming back to the domestic consumptions. This year, the most question we received is no longer whether China is investable or not, it's how to engage. In short term, people may see uncertainty for China. Then for that type of investors, they may be looking for low volatility strategies. In the mid-run, people may think China is resilience. Then people will invest into going global themes, investing into anti-involution themes, invest into the industry re-upgrades or upgrading themes. But I do believe if you're talking about long run, we are also a China long-only manager. We like to talk about it in the long run. Rebalancing is the theme, and domestic consumption is definitely in the center of that resilience or rebalancing investment theme. On that one, also coming back to the offerings for China investment, especially for the domestic. In the previous session, one of the panelists also leaving a very powerful statistics. We are looking for an economy, 1/4 of the world GDP, only accounts for less than 5% of the MSCI ARCI index, has becoming one of the major power of a global AI value chain. Enjoyed the valuation expansion for the last 2 years. But what we really missed out is the lack of the earning improvement. If that's the case, I do think that's how we can finding resilience from this panel, also to the investor in this room.
Thank you ผิงฟันเซนเซนขอบพระคุณคุณผิงฟันนะคะ so next ก่อนที่จะแปลนะคะ let me ask Kevin a bit to follow up what you see China right now. So for the people right here, if they are underinvest in Asia, what would be the case that you would ask them to revisit Asia in 2026 again, especially in China?
I think just a little bit follow up on Bin's argument. I think that's very clear that there's a massive change in policy direction. A few years ago after COVID, market concerned about whether China is investable, because they think, the policy direction is so unpredictable. I don't know whether my investment today will become loss in the future when the regulatory storm is ongoing. But now it's no longer the case. We think that the regulatory storm in China has already passed, and the policy direction in China is much, much more clearer now, and the predictability is also much higher. The reason behind is basically due to geopolitical tension. Because of the trade war, trade ban, trade tariff, etc., it basically forced the government to stay independent, very strong in motivation to make the country independent in different kind of key areas. Technology is one place, and then energy, safety is one place, because we need to achieve this kind of independency so that we can resolve the problem of supply chain safety. Therefore, we think that this is one policy area which we think is very clear and predictable. No matter how it happened tomorrow, say Donald Trump, for example, cancel all the trade tariff or cancel all the trade ban, China's support on technology, energy safety will not change because nobody knows what will happen overnight. That may flip again. And the other area which is very predictable is about growth, has been also mentioned that China government has been put out a very clear signal that since late 2024, growth is now become the top priority of the country. Because of the geopolitical issue, the weak economic growth, the country need to maintain or make sure most of the people, especially the low-income group, they can live a good living. Therefore, we have a lot of policy combo supporting the property market, stabilizing the property market, supporting the equity market, and also the GDP growth target, although it's slightly below 5%, but it's still quite a solid number. So what I think is, with all these backdrop, investability for China is much better than before. That's why we need to come back to look into China. And also one more short point I want to highlight is, there is a decoupling of GDP growth and the market performance, which has been doing very well while GDP growth was on downtrend. Mainly because nowadays, especially China A-share, the representation of the index is changed significantly compared to the past. Currently, for example, IT accounted for 25% of A-share index, comparing to only 1% in property. So you can see that now the market is more represented by those fast growth area, comparing to in the past, more represented by the GDP-heavy sectors like property. Therefore, I also advise our investor, don't be too focused too much about the growth, the macro headlines, the negative number or the weak economic growth, but focus more on investment in the area with structural growth opportunity. All these are very different from the past, and that's why we think it's also a good time for us to revisit China or Asia, etc.
โอเคค่ะขออนุญาตแปลไวๆนะคะอยากรู้ว่าจีนเป็นยังไงคุณผิงฟานบอกให้ไปดูเองคุณเควินบอกว่าตอนนี้เรื่องของ regulatory risk เนี่ยหมดไปแล้ว so let me move to the final round I just discussed with คุณแม็กand คุณอภิจิต that hey I think this week is the right timing last 2 weeks not the right one but this week is the right timing as we have seen the negotiation coming up so if you want to share with us the key takeaway for investment idea in 2026 for each of you, what would there be that you want to share with the audience today? Please, Kun A. Katrina.
Okay, I'll take. Look, I think ultimately, as I said, I think focusing on the structural drivers of growth is the key opportunity. Identifying which countries have that structural opportunity, then deciding which asset classes you want to invest. And again, if I would say which asset class, and again, not to forget, we talked extensively about equity, but don't forget about fixed income. There's 3 words about fixed income. There's an income generation that is there that provides a cushion. There's a buffer to the volatility. It's generally less volatile in periods of market downturn, and you can see this in whatever high yield or IG. You've seen the drawdowns in credit markets have been lower, and as well it acts as a portfolio diversifier. So again, think holistically about structural drivers of growth, where the opportunity sits in the world, how do I deploy it, and don't forget about fixed income in your allocations.
Thank you. Ping Fan Sen, please.
Yeah, I just want to share some observations. So the same market factors tends to be overrated in the short run, but underrated in the long run by the same coherence of investors. Same thing applies to when it comes to China investment. So my ending note is going to be, I'm using an analogy. If you're looking outside from ground level, you only see trees. But if you're looking out from the 10th level, you see the park. I'm wishing everybody in this room climbing to a higher floor in their China investment.
Thank you. Mr. Kun Matt, please.
Absolutely agree with looking at the long-term structural drivers, some of those structural drivers being AI and power demand, as we mentioned, their decarbonisation, electrification, its reshaping of supply chains and onshoring and friendshoring and so forth. Look for investments that can get exposure to those various themes. Look for resilience, look for predictability in your portfolios, look for inflation protection given the increased uncertainties going forward, and then look for valuations. On an infrastructure lens, a fast-growing utility maybe 10 years ago was growing at 4 or 5% per annum. Today, that same utility, fast-growing, is growing at 8 to 10% per annum. Yet we have not seen a change in multiples over the last 10 years, which means all of the growth that we've seen has been underpinned by cash flows and earnings. I think it's a very attractive, entry point into the asset class.
Thank you. And Kun Apijit, please.
Thank you. I would say that, look at growth, and at this time in the world, you look for a country that's growing, and India is growing as it's going to be the 3rd largest major economy in the world. You look at sectors, that you are familiar with in the Thai market and can relate to. You look for a manager who is local and can understand this space well for you. I think, these are some of the suggestions that I would have. And even when you look at the size of the market. You're looking at 1.4 billion people, a very aspirational society, looking to get a better life for themselves and for their families. So a great country to invest into from a long-term perspective, very consistent when it comes to policy. The government is very open. You can see that there's been significant investment when it comes to using technology, when it comes to payments, when it comes to making life better for the citizens of the country. So I would say we speak about diversity and diversifying your investments. India gives you that diversity. There's a very good mix of large caps, mid caps, and small caps to look into. And then finally, when you sit down on the table and you look to invest, do think about this country, because this is a country that is going to grow for the next decade and so, and a very good place when it comes to policy to put your money in. Thank you.
Thank you. And last but not least, can Kevin please?
And actually, for the context of China equity, I think the most important takeaway, I hope you guys will get, is actually we need to be aligned with policy. Policy alignment is very important. China is a planned economy, therefore we need to not only know about what is the policy, but more importantly is why the government is pushing out those policy. As long as we understand the rationale of the policy, then any kind of short-term fluctuation, market news will just become noise, but not risk. For example, in the technology space, like what we talk about, geopolitical tension, trade tariff, it will often create market volatility. However, if we know that this kind of restriction in short term could accelerate the long-term development of China, then this kind of volatility will become the opportunity for us to invest. Therefore, I think that it's important for us to know about the policy alignment. When we invest in the companies that align with policy, then they will turn this kind of a potential noise or risk into structural growth opportunity. Actually, we do have an afternoon section focused a lot more on the detail of our product and China offering in the country fund and also technology fund. So welcome you guys to join.
Thank you. So let me translate this. วันนี้นะคะเราก็ได้คุยกันถึงประเด็นเรื่อง resilience คำเดียวเนี่ยมันต้องใช้หลายๆสรรพกำลังนะคะเราก็คุยกันตั้งแต่ประเด็นในเชิงของประเทศในเชิงของอุตสาหกรรมเข้ามาใน major countries ทั้งจีนและอินเดีย panelist เนี่ยให้ insight ให้ information ที่ทั้งลึกและกว้างนะคะแล้วก็เจาะลึกทั้งฝั่ง equity และ fixed income ด้วย so let me thank you for all of you to join with us and share your insight and thoughts about how to add the resilience to portfolio. And without you guys, it would be very difficult for us to, work on this. So with our collaboration and cooperation together, I think we can work together to add the resilience to our investment portfolio. Thank you.
Thank you.
ขอบพระคุณค่ะ